look at the S&P 500 as we get ready to trade December week 2, 2020. During December week 2, as we get further into the week, Thursday night when futures reopen for the overnight trade into Friday, we will see the ES contract symbol roll over to the March one. Then we start to see volume pick up more in that March contract as that March contract becomes the front month, and we see less volume in December. Oftentimes we see a big swing in the market happen around this as big holders of ES get out of the one contract and want to get into the other one at a lower price, or vice versa. Get out of one at the lower price if they've been shorting it, and then move into the next one. So here we are looking at the S&P 500. We traded right up to just below 3,700 on Friday into the close, made our new all-time closing high and weekly all-time closing high on Friday at 36.99.12, just off of the high of the day at 36.99.20. With about a 3/4 of a point spread with ES. As soon as this, as the S&P closed, ES shot right to 3,700, so that would have seen the S&P at almost 37.01, and then it pulled right back off of 3,700. So there were some sellers sitting there ready to knock us down at 3,700 on ES. We'll see if that follows through into Sunday when futures reopen. If we take out 3,700 and just keep going higher, then we know that was just a Friday OPEX thing and just a Friday specific thing that was going on, holding us down below 3,700. So I'm going to talk about, when I show you the next chart, why I keep talking about 37.15 and then 37.80 as the next two targets if we can take out 3,700. But as long as I've got you here on the roadmap, let's talk about potential downside first. My main focus is this 10-day simple moving average. Moving up here to the top of this gap, the low, the one that takes us back to the November close, and where the December lows have consolidated at. It's rising up right to there by Monday, and by Tuesday it's going to be in line with Thursday's low. So if there's going to be a swing backwards, if we're going to keep projecting 3,700, we're going to look, obviously our first thing to look at will be the halfway back of Friday's range, right down the middle of the candle, probably aligning with the high from Thursday. And if that doesn't hold us, then filling in the gap to Thursday's close, maybe looking below it and reversing, holding another higher low against Thursday. And that would be a really bullish thing, I think, because it would prove that this low that we jammed down to on Thursday was on news anyway. And if we could just get down here and prove that this really was some good buying interest here, we know that there's good support here around 36.58, our line in the sand. Where this low was on Friday, and there was a lot of consolidation intraday on Tuesday and Wednesday as well there. And like I said, our 10-day simple moving average will be here by about Tuesday. So if this is like 2 days of a little bit of slightly down action, maybe we're looking for a trip back to this 36.58 by Tuesday and a test and hold above the 10-day simple moving average. If we get down below the 10-day and we get down below Thursday's low, then we'd have to one more time test gap support to the November close. And the third time usually does not hold the low. I think if it came back down here a third time, we'd probably just go ahead and break and fill this gap to the November low. However, in doing this, we would kind of break the spell of this little measured move target that I think we are on trajectory for. So let me explain that now and talk about those upside levels. If we can get above 3,700, I was thinking maybe we would try for 37.15 and see if we can take that out and hold above it. And then if that works, then we would drift on to 37.80. 37.15 is just a simple plus 15% move on the year. This high that we made back here in September, September 2nd, we hit 35.88. That was a 2-point, literally a $2 look above the plus 12 or 13% marker on the year, and then we pulled back off of that. So if we're just going to take like a couple bucks look above maybe the 15% move on the year and pull back, that makes a lot of sense. And if we make it up here to 37.80, that is also about a $2 look above 20% on the year. But really the main reason I have this 37.80 is that it's a measured move target. And it takes the measured move of this set of candles right here that were in November. This was the November high. This was, when we got that first set of vaccine news in pre-market, and we opened and shot up to 36.45 $34.99 and sold off from there, and then continued selling the next day. But then from there, we held that low, and the rest of the month we were boxed in this range above this low but below this high. And it wasn't until the first trading day of December, this week that we just traded, that we finally broke out above this 36.45.99 level. So, and we coming down to our low, 36.45.87 on Tuesday, and then Wednesday this week, 44.84. So there's been a lot of, activity in here, and you can see there was a high in here that tried to break out. I think we got to 36.42 here on November 27th. So if we were to take this range here and simply double it up, that's what gets us to 37.80. And like I said, 37.80 would be that $2 look above the 20% mark on the year. So that makes a lot of sense to me. Okay, so that's that. Let's take a look now before I wrap up the video. I wanted to show you something here. This was VIX Futures on Friday. Here was, late Thursday night going into midnight, 1 a.m. Eastern time. We were topping out here at 23, and we fell back, and we hit our low for, the VIX Futures around 11 o'clock Eastern time. But here was the end of the day. As we're rallying on the S&P, we're going up on the VIX, and here was this leg at the end of the day. So as we were rallying at the end of the day, we were also rallying on the VIX Futures, well above the 20 EMI line. If you were looking at this as a stock or as the S&P or something, you'd say this was a very bullish move. Well, if we're rallying on the S&P, we don't want to see a bullish move on the VIX. This doesn't look good to me. This was not cool that this was happening underneath the surface. And then the final thing I want to talk about is just next Friday's options, December 11th. We see some volume standing out of the 36.50 and the 36.20 strikes on the puts. The 36.20 strike, where we closed at on Friday, would be the $8 window. Remember that ES went, slammed up and that went up and then came back down. So these are probably representative of where price is when we're around 36, the mid 36.90s on S&P. So an $8 window if we're at 3,700 probably, and then these were probably about the high 13s at 3,700, these 36.50s. Over on the calls, there's lots of clustered volume and all kinds of strikes here from 37.10 on up through 37.25. That rhymes a lot with shooting for that 37.15 target. But then all of a sudden volume stands out here at these 37.50s. And that rhymes with breaking out above 37.15 and working our way towards that 37.80 target. I don't know that this would happen all next week, this 37.80. Maybe we would reach and take a look above 37.50 and then go into week 3 and top it out at 37.80 and then see that slam happen as, where players want to get that ES contract, that March contract down to a nice low price so they can get in. Maybe that's the way that will work, but I just wanted to show you how the volume is clustering here around 3,700 on up through 37.25, and then the next set of volume comes in at 37.50. And I didn't even look at this until tonight when I was making this video, but I came up with those targets early this week, that we just started trading. So I know I'm on the right track here when I see the volume just sort of like, break like this. From 25 all the way up to 50. Okay, I hope this makes sense. If it doesn't, if you have any questions, just give me a direct message on the private Twitter account. As always, good luck and good trading.